And, with one of our favorite narratives against corn, the idea is if you can sell the black line to the blue line and the price is bubbling against that as well, we should be able to sell at these lower prices. And it is about the momentum of the lower price. It's about trying to find these tradable areas where that value keeps getting better and better. In the background, of course, we've got the swaps on the wheat sell side since the new contract, so it's difficult to zoom in because we've got the new contract change here, which obviously changes this story. So we've got to zoom into it to get rid of that. And it's quite obvious that the swaps have been sell side. This is the swaps through December. And you might look at that and say, well, swaps through December have been really good. But obviously, again, it comes down to this idea of then looking at it and saying, okay, but what are we pricing here in terms of the swaps? And the idea is we have to go back and try and figure some of these kind of questions out in terms of relative value swaps. So what is a good value in a swap? So we go, obviously it's about trying to do some numbers. 60 down to a low price here of 60 points down to a low price here of 68 points. So that's about 9 points in total during that phase, and this must be the discount phase. So 9 points in total from swing high, and we go from a high price of 59s to say 38, so say 20 points. So 20 points for 9 points on the swaps, 20 points for 9 points. So if I'm looking at this here, we're already now able to do a calculation. If I know the high here is at 42, and the low price here is what? 47, that's 5 points. So that means we should be going about 10 points off of the pullback storylines. Now, obviously, the high was put in here, so we're obviously now trading into that pocket, aren't we? And it is getting bigger and better as well. So, we're obviously taking some time out of this because we're going using December and, we're going out to December. So that hasn't changed. So, of course, this is going to get closer to zero. But the key, of course, is not necessarily this, but it's about the impact of something else called the US dollar. Take a look. It's almost the same line, isn't it? The swaps and the US dollar almost follow point for point on the way down here, giving us an idea that we should be selling any commodity, not just necessarily wheat. Not just necessarily the wheat trade here, is it? So the grain traders who are involved in this bit of business, looking at this very toxic sell top edge, the black over blue in terms of the corn wheat spreads, giving us that story. So if we get rid of these stories, and we can now use the dollar for a proxy of the swaps, because obviously when we push the contract out, we lose that storyline. Look at the size of this buy trade here. It's an enormous opportunity to buy some of this very, very cheap product down here, isn't it? Look at that. Looking into it as we zoom in, you'll see where the blue becomes discounted to the black. You can see a massive area where the blue becomes discounted to the black here. You can already start to see that. So how do you start seeing that? Well, if you just draw a price level across, you'll notice that the blue is about the same price. The black is a lot lower. And in that area there, you can see with the dollar running very hot, I like the idea of bidding into this. And obviously if you bid into it, you might be a little bit concerned about what happened here, but that then flipped out when it broke and you got the value straight back in here. And obviously in that type of trade, you're now just bidding into the momentum break with the dollar running in your favor. Now you're bidding into the momentum break on wheat here, and you're trying to punch this price through. Now obviously you get a contract roll here, so that's not actual value there, it's just a contract roll. And from that point onwards, of course, we're now following the play. Now, the idea, of course, is following the play. This should be bullish. That's the point. If it's not bullish, you start seeing the value showing up. Because following the play means that this market should have been going up, and it's not. Well, that means that somebody with information must be selling into this. So when we see that happening, we can join in with the party. And obviously the sell away from that's just now making a lot of money. When we see it, we can deal it. You see that situation there in the short term, the price should be following the money. So if the trade should be following the money, this black over blue should be a buy trade. And obviously the price dropping off is fair. So we should be able to buy it straight back up, and then we'll see how it develops. If we start seeing it bubbling, that's a different story. You know, if we start seeing it bubbling, it's a different story. There's another buy opportunity so that you can trade this as a momentum play or otherwise. So you can see here in line with the dollar storyline there, that's going to be a buy trade, black over blue. Black is wheat minus corn 2, and the light blue is wheat 1.5 minus corn 1. Yeah. So we get this idea of the ratio spreads. We get a black over blue there. And as a momentum trade, if the dollar works for us, we can work into that. We get black over blue there. As a momentum trade, the dollar works for us. And, you know, obviously that's not really true because the dollar was actually working against us on that bit of business. But there's a black over blue. And again, you get another opportunity if you wanted to scalp out the wheat trade there. And it's always a good trade at that time of the day. Why? Because this is the opening. This is the opening market make. Do you see how that the black over blue came in here at 3 o'clock? See that, Nick? So the timing's really useful here. So obviously that's into the market makes. And what they're trying to do here is they're trying to manipulate liquidity for the long there, aren't they? So they're trying to manipulate liquidity from that opening candle long. They're trying to manipulate liquidity into that opening candle long there. And obviously that buy trade then rips away from this. This buy trade here rips away from that as well. So that's the important candle because that's where the volume's starting to go. And where the volume starts to go, information causes it to go, but obviously that then drives the storyline at that point. This one you see there's no black over blue, and the price just rips, probably rightly so, the way it should have ripped. In this one here, you can see it's black over blue. Do you see it? Black over blue. You might not see it, but there's just in there. There's the blue dropping. There's the black rising. It's going to try and get into the bottom edge here, but it comes up a little bit short, and you need to do business. I mean, you're running out of time, so you need to do business by the end of that candle. Make sure you're in it, and you know, and another nice rip to the upside at that point. And these are, you know, this is the current candle that's on it, and at the moment it's black over blue, which means it's a buy. But obviously they've already got it ripping to the downside, so it's not really a standout and anomaly at this point. It just looks like the same as what we had before, and that's a very sharp sell trade. So sometimes the second candle, if it doesn't go up, it's going to continue in the process, and that's kind of what's happened today. It's continuing in the process. And that's in line with what we've seen in other commodities, of course, like the oil price is dropping, and and it's difficult to do anything on the other side of oil here. So it's pretty much following other commodities rather than being wheat specific, isn't it? But the calendar spread still obviously the very, very most important, bar none. And, the calendar spread, the most important, bar none. And it's always a good idea, not just to get the calendars on the wheat, though. It's also a good idea to do your corn as well, because you want to know if the swaps are on that, the swaps are going to be on everything, right? So we know that these ratios, these spreads are going to give us pretty much all we need to see to try and figure this thing out in terms of spread opportunities across some of the other markets. And so when we put on the spreads on the corn, it's the same sell side story, isn't it? Look. So the corn is the same sell side story, and it has been since this entire top edge has been put in. And there's no way I'm going to be a buyer of wheat anytime soon. Not a chance in a million years am I going to buy wheat anytime soon. I don't see it. I don't see how you could possibly ever buy wheat. It's been sell side this morning, sell side only. And even this buy trade here, I think, was a bit of a piss take to try and get that higher price, to be honest, when you're looking at the swap dealers. And the swap dealers, who do they trade with? The grain merchants. The swap dealers and the grain merchants trade with each other. Swap dealers and the farmers trade with each other. So you've got the farmer on one side of the swap, you've got the grain merchant on the other side of the swap, and with the farmers on one side, the grain merchants on the other. The idea is that this is what they're trading, is this narrative here. So when you're getting a higher price as an outright, you've got a great opportunity to make some nice money. You knew because of this candle here, there was a very high probability you were going to get a higher price. You did get a higher price, and you made some nice money. Now you can see that black line is just about turning up here, suggesting that this will probably start jamming up now at the bottom edge. So if you were short, this would be a good idea with the separation on the spreads here and the skews. This would be a good idea just to book a little bit of money in there And you'll see if this is going to give you a bit of a pause for a little bit of breath here. But sell side only. But I would not trade your wheat without having the corn spreads as well in play. If you're trading the corn spreads as well, well, your sell side only. Simple as that.